can um, give you a really good idea. Jay and I are super excited about our new release on the Amazing Trader. So some of you are familiar already with the Amazing Trader, but we've just done some substantial upgrades to it. We added alerts, which I think you're going to be really excited about. I know that it's helped Jay and I in our usage of our own product. So we are excited to share it with everybody. And I'm going to want to get through this thing relatively quickly to give you guys the basics of what's going on. If you have questions, you can type them in. You can also um, email Jay after the presentation. You all have his email address, so you can email him after the presentation if you like, or you can pop in with some questions online. Please try and hold questions if you do have them. Please try and hold the questions until the end because I want to get through a real good, quick presentation of the basics, just to give you a taste of what this is all about. So I must read the disclaimer. You're all seeing it on the screen. You all have probably seen this disclaimer or something like it many, many times if you've been on any trading webinars. But it's important that we do disclose this information regulatory wise. Future stocks and options trading involves substantial risk of loss and is not suitable for every investor. The valuation of futures, stocks, and options may fluctuate. As a result, clients may lose more than their original investment. The impact of seasonal and geopolitical events is already factored into market prices. The high leverage nature of futures trading means that small market movements will have a great impact on your trading account, and this can work against you, leading to large losses, or can work for you, leading to large gains. So it's important that we get that out there. I'm Michael Weissman. Some of you know me already. Maybe you've seen some webinars I've done or been in some of the conversations we've had online. Jay's partner in The Amazing Trader. Jay was the original inventor and creator of the Amazing Trader product a few years ago. He actually sold me as a client. I got very, very excited about what he had to offer. I saw the merit in it. And so he and I have been partnering because I've added substantial amount of to what we've done with it and how we use it, in particularly our style of trading and our risk management. So I'm going to be handling this particular webinar from here. Jay is on, but so he may be able to type into some messages, but I'm Michael, and I'm going to handle this webinar from here. So thanks for joining, and let's get going. Okay, hang on a second. Okay. You don't have to look at my chart for right now, okay? But this is a chart of the dollar CAD. The reason why I have it up is because we had an alert out a little while ago. I want to show you how it worked out and exactly what we were looking at, what we were thinking. But I'm going to get to that in a minute, okay? What I want to talk about is some general points, okay? Hang on a second. Just got to admit some more people to the room. Give me 1 second. Couple of additional people have joined, so let me just get them into the room and so that they can hear what we're doing. Okay. Jay, you can turn your video off. Jay, I see your video. You don't need the video on. And I'm just waiting for somebody to join. They should thank. Okay, Jay. They should be joining now. Hold on, let's try them again. Waiting room. One joined. Sonny. All right, Sonny, it says you're joining. Um, if you don't join us in time, if this doesn't connect in time, then we will have a recording for you as well. Okay. Um, so we're really, really excited about our alerts and risk management system. All right. And, the point of this is to try and take as much of traders' uh, failing points and create a very simple, easy to replicate trading system that operates the same every single day. There's only a few moving pieces that you're going to be responsible for. And every single day you're going to be coming in and you're going to be doing the same thing. Okay. Now, these alerts, I want to be clear. They are not auto trading. These are alerts. These are a starting point. And I'm going to explain to you briefly kind of what they mean and where we use them as a starting point, and then how we go on to do just a little bit more analysis to decide whether we call this an A trade or a B trade or a C trade. We'll let you know what all that means in a little bit. It's our experience. It's also our programmers' experience over many, many years of trading that there are no 100% great algos that you could just let run all the time, hook it up, let it run, and expect to make money. Okay. Everything we have seen requires at least a little bit of human intervention. Okay. In order to work. Because trust me, if there were these algos out there that you could just hook up to your computer, pick them up to your trading account, and just let them run and expect to be profitable over a long period of time, they wouldn't be available to you. And they certainly wouldn't be available to you for $99 a month or $200 a month or $300 a month. If there was something out there that was just so good, okay, you're not going to be able to buy it. They're not going to be accessible to you. This requires some intervention, okay, which is what we're going to teach you to do. Right now, all of our alerts, these are just basic information for right now. Okay. And then I'm going to do some demonstrations for you, some live demonstrations. All of our alerts come out on 15 and 30-minute charts. Okay. We are day traders. However, while the alerts come out on a 15 and 30-minute chart, okay, we also need some backup information to put those trades in context. And for that, we're going to be using some 4-hour charts to help us identify which of the 15 and 30-minute charts represent the best trading opportunities, because they're all going to look the same. The 15 and 30-minute charts are all going to look the same or very similar, and I'll show you why. But depending on what the longer term picture looks like, we interpret them differently as to how good that 15 or 30-minute alert may be. All right, so it's very important to know. So why do we look at 4-hour charts also, even though we're day traders? Because it's, 4-hour charts, bigger money, longer term, professionals, good swing traders, they mostly use 4-hour charts for entries and exits and for creating their levels of which they're looking to trade against. Okay. So the more people we know that are out there in the marketplace that are swing traders and bigger money traders, and we know they're looking at 4-hour charts, it's important for us to understand a little bit about what the 4-hour charts are showing us, because by understanding better what's going on in the 4-hour chart, all right, that's what we use to help distinguish our alerts on the 15 and 30-minute charts, okay, one from another. Which one's better, an A trade, a B trade, or a C trade? Um, Besides our alerts, this is going to require just a little bit of technical analysis. If you guys have been trading for any period of time, you've all done this, and I'm going to show you on the charts, okay? But on every chart, we have a 50 DMA, a 200 DMA, moving average, excuse me, and we also use some very basic Fibonacci retracements, okay? That's it. That's the knowledge that you need, and we're going to show you how easy it is to do. Okay, so it does require our alerts, plus a little T&A, both on the alert, TA technical analysis, both on the alert, as well as on a 4-hour chart. We have a very, very simple strategy here that you're going to do every single day on every trade. Okay. This is our strategy on how to use the alerts and our risk management and how we're going to enter and exit trades. Okay. We're going to risk the same percentage of the account on every trade we do. Every trade, you're going to risk the same percentage of your account. Very, very important. We'll show you how our risk management tool will enable you to do that very simply. Okay. We use a 1.15 to 1 risk reward goal. So whatever we're risking on a particular trade, our take profit is going to be set at about a 1.15 to 1 risk reward basis. Okay. And our goal as traders, very simply, is to be right at least 55% of the time. Okay. Remember, every trader has losses. Every trading system has losses. That's the nature of the market. But if we can get you into certain trade probabilities where you're right at least 55% of the time using our risk reward, okay, then there's a lot of money to be made. And I don't want to say consistently, But over longer periods of time, these odds will play out, and there's some very, very good money to be made with using moderates amount of risk and being relatively conservative. Okay, so it's really, really interesting. And so understand that the same thing on every trades. Okay, now when we look at alerts, and before you put on any trade, okay, just in general, you got to ask yourself two questions. Okay, on any trade, any system, no matter what you're doing, and in particular, this is what we use for our alerts. So the first thing is, where am I wrong? All right, you're looking at putting on a trade, whatever it's going to, you're going long, you're going short. The first question you have to ask yourself is, where am I wrong? Okay. And right away, that's where your stop loss goes. Okay. If something, you know what, if you say, hey, I'm using this line, this Fibonacci, this amazing trader line, and our alerts will give you the stop loss. Okay. And that stop loss is never to be touched. Okay. That stop loss is there for a reason. So every alert that you get, if ultimately you get into that trade, that stop loss is going to be the stop loss in the alert, and you are never going to change it. Okay. Very, very important. Okay. So where are you wrong is okay. That's where my stop loss goes. And if it comes up and hits my stop loss, then you know what? This trade didn't work out. The second thing is that, okay, if I am wrong, how much am I risking on every trade? All right. That's also very important. And so we're going to show you using our risk management tool. You're going to decide, and we're going to make some suggestions, and I'll tell you what we use here. Okay. But every trade, you're going to be risking a percentage of your account. Okay. Small percentage, probably, starting off maybe 0.1%. Okay. And then building up to maybe 0.25%, maybe even 0.5%. But we keep risk moderate. Okay. So every single trade, your account is not hinging on it. It's not open ended. Okay. Maybe you'll be risking between 0.1%. So on a $100,000 account, for argument's sake. Okay. So 0.1%, you're risking $100 on every trade. Okay. On a $100,000 account. 0.25%, you're risking $250. So these are moderate amount of risks that you should be taking. Okay. But we don't want to take on too much risk, because when you take on too much risk, something in some area could go wrong, and you can take a very big drawdown in your account. So we require, and we insist, okay, that you use our stop loss, all right, and you never touch the stop loss. Your take profit in the alert is simply very simple. It's going to be 1.15 times whatever your stop loss is. Okay, that's how the take profit is set in the alert. So you're going to get an open. Okay, when the alert goes off, I'm going to show you when that happens. You may be here when the alert is off. You may not be available. You can certainly come in and check alerts if the trades are still, open. There may be other opportunities to get in. You may not like this particular setup after we do a little bit of analysis when the alert comes out immediately. Excuse me, the stock market's opening. Um, so you'll see. So key things here is where am I wrong? Because that'll never change. And how much risk do we want to take on each individual trade? And we know that we're looking for a 1.15 times the risk for our take profit. And for the basis of our charts, we're going to, once this is all entered and you pick a trade, you're going to let the trade run to the stop loss or to the take profit. Okay, very simple. Now, when you get a little bit more comfortable with the system, maybe we'll play around a little bit with the take profit. But for starters, let's just say you're going to let you're going to let the trade run to either the stop or the take profit, and you're never going to move the stop. If it gets hit, it gets hit. Losing trade. Okay, you will have them. Okay, even if you're right 55% of the time, which could be very, very profitable, that means 45% of the time you may have losing trades. All right. So very, very important, at least at the beginning. Stop loss never gets touched, no matter where you are, no matter what your skill level. The take profit, we can teach you a little bit later. Maybe you'll take up there are areas where you want to take profit a little bit earlier. Maybe there are areas you want to say, hey, let this trade run a little bit. That's for more advanced usage. Okay. Now, every trade that we do will have the same basic setup. Every trade. Okay. And what we are looking for, and I'm going to show you examples, is what's called a directional indicator and it's going to occur at either the high or the low of the day. We are looking for a reversal signal. That's what our alerts are. They are potential reversal signals at a high or a low of a day to now retrace. Okay, it's very, very important. So every signal that goes out, all right, is going to have a directional indicator at the high or the low of the day. They're going to look very, very similar. There are differences. The directional indicator, which I'll show you, some directional indicators we like a little bit better than others, and you'll understand a little bit when we go further. Okay, but every trade is going to kind of look the same. It's what we do as an evaluation right afterward that will determine whether we take the trade where it is, or maybe we wait for a better entry and we watch. Okay. So the stop will always be, okay, the stop will always be the high be above, excuse me, above the high of the day if we're going short, and below the low of the day when we go long. Okay. Now, not every directional indicator on a chart is going to set off an alert. All right, not every one. We have proprietary code in there that helps us distinguish what directional indicators are more likely to work out as a trade than others. So every chart is going to have every trade is going to have a directional indicator. Okay, but we're going to have plenty of charts that have directional indicators that don't necessarily kick off a trade. So this is where, or an alert. So this is the starting point. Okay, so let me go right to a demo now. Okay, so now we're on dollar CAD. Now let me show you exactly what we mean. And I'm going to show you how to use everything. Okay, so by the way, if you see down here on the program, now we don't have any new alert boxes. When an alert goes off, two things will happen. Number one, you're going to get a pop-up box, boom, and a ding on your computer on your MT4 platform that an alert has gone off. Okay, but all of the alerts are accessible down here under this green button. Okay, alerts, and you click it and alerts. And these are all of the alerts that we have already had today. So we got a number of different potential trade opportunities today. Way, way, way too many for me to analyze with you in current form. But the last one was the dollar CAD, and I want to show it to you because it's a really good illustration of what we were looking at. Okay, so we had a dollar CAD which went off right over. If you see my mouse, let me open this up. Okay, so this is a directional indicator right here. This is the 15-minute chart on dollar CAD. Okay, what's a directional indicator? A low of the day followed by a higher amazing trader line. Okay, when this amazing trader line confirms, now for those of you who are familiar with amazing trader, okay, this line won't confirm until the close. See, it started at this candle, but it won't confirm as a directional indicator until the opening of this candle, the second candle. So it's the close of the candle right after, which is corresponds with the open of here. So this is where your alert would have gone off. Okay, right here. And if you look down here, right down here, the low. If you look at the bottom, I moved it. If you look at the bottom of my screen, you'll see that the opening of this candle right here was 36.34.4. Okay. And if you go to the buy alert, you will see that we had an open of 36.35. So right when this candle opened is when the trade kicked off. Okay. Now, what are we looking at here? Right away, that's a great start. Okay. I'm going to tell you right now, this is a B plus trade, and I'm going to show you why. The one thing that prevents us from being an A trade is ideal, and you'll see the difference because I'm going to show you another chart, is that we would prefer that the directional indicator, the two lines, were a little closer together. Okay, that would mean, that this line would have been more, down here more. If that line was down here more, okay, that would be a slightly better directional indicator for us, because by the time this candle opens and we're already up here, we're pretty far away from the low of the day. Our stop will be below here, and therefore you would have to be making a lot more in a take profit in order to be able to get you have to make a lot of more pips in order to be able to get your take profit. So it's a B plus trade. So why? We have a good directional indicator. It would be an A trade if this was a little bit closer. But now, on further review, all right, we want to go now to a 4 hour chart. I want to show you some key things on a 4 hour chart. What do we have to back up this trade? Okay. So we got a couple of things. Let me show you. Here's where you have to learn basic Fibonacci. Okay. So let me show you this. And very, very simple. Okay, go up here to the F. And what we're going to look at, so hold on. What we're going to look at, we're going to go from the low all the way up to this high. Oops, sorry. Okay, so we're going to go from the low all the way up to the high. Basic Fibonacci. So now we have a long signal on a dollar CAD this morning. So what are we looking at? Well, when you look at the 4 hour chart, you see we had a low to a high. We came back down and look at this, hit the 50% retracement. Now, this is last week, okay, but we're analyzing a 4 hour chart in order to kind of help put the odds on your side. We have two things here. We have a big move up followed by a 50% retracement. And we're on a 4 hour chart. It's very, very common and a very key area where swing traders, okay, are going to try and defend. Okay. So we know right away that this is an area to be watched out for. And it held at the 50. So what does that indicate? That indicates to us that the next move, there's a good chance of going higher. Now, this was last week, so this doesn't necessarily affect today's trade, but we know on the 4 hour chart, and we have a 200 moving average right here. Okay. So not only did we have the 50 Fibonacci, we had a 200 moving average showing as big support. This area held as big support, tells us that this larger move is intact and we are now more likely to go higher. Okay, so we put that on our side. So right away, that is a favorable situation for us. So we're looking at it and we're like, okay, we're in a swing pattern up move. So that puts added um, comfort to us that we are on the right side of this trade, that going long right now is a potentially good opportunity. Okay. But now, all right, but now we got to focus a little closer because now we're in this week. All right. So, okay, that puts us on our side and we're feeling good. But now what's happening this week? We have a directional indicator on a 4 hour chart. Now, we're not trading 4 hour charts, but we do have a directional indicator. So once again, and this one's even a little bit tighter. This is this week. We broke through a little bit here, but that's okay. That happens all the time. Because even if we were using a 4 hour chart, your stop would be below here. So this would never have gotten stopped. So now we have a new directional indicator pointing that, okay, you know what? We could be again moving up. So our bias is up. So now, because our bias is up on the 4 hour chart, when we get a 15-minute or a 30-minute trade alert, we're really on, now we're really looking heavily at this trade. And if it wasn't, and as I said, if you go back to it, if the 15-minute chart, once again, if this directional indicator on the 15 was a little bit tighter, this would be an A trade. All right. But we're calling it a B plus trade. It's a trade you absolutely should have done. We did. And let's see how it worked out. So we had an open of 36.35. We had a stop loss of 36.13 and a take profit of 36.60. So we would have been in right over here, we said at 36.35. And we had a high already of, where do we go? 36.66, take profit hit, trade over, and done. So this trade worked out beautifully in a very short amount of time. Now, as far as dollar Canada is concerned, you know what? We're not looking for any more signals or expecting any more signals, at least to go long, because the low is already in. The only way you'd get another signal on this, okay, to go long is if we got another big move down, doesn't take out late or somewhere, doesn't take out this line, okay, and creates another line down here for another directional indicator. But you know what? At that point, we're probably too far away to really warrant it. So as far as your dollar CAD longs for the day, you were here, you took it, you made your money, you missed it. Okay, on to the next trade. Now it's possible we may get a dollar CAD short later. Okay, if we get a new directional indicator at the high, but we'll have to see. But we already know that our bias. Now, why would I look at a directional indicator now at the high? Let me just show you something quickly here. Now let's look at another. Now let's check a Fibonacci. Back to the 4-hour chart. Not looking to confuse you guys. Okay, hold on. Hold on. Shit. Let's do this. Let's do this. Okay. So now, just take a look. Okay. Now, supposing, okay, we do like the high, but we do have, moved down here. So, you know what? We had plenty of room to get into this trade, to make our money, and to be out. Because now we're coming into key resistance area. So maybe what's happening, okay, is we look at a fib from here. I'm sorry, guys. I think it's a little touchy this morning. So now we set a Fibonacci to here and see what's going on. If we're going to look at, well, supposing we get a signal, okay? Supposing we get a signal. Now remember, our trade had already happened. We had already made our money. Now suppose we get a signal today. What do we have? Now, if you look at Fibonacci this way and you want to consider going short on a short signal here, look what you had. You had a move down, a retrace up to the 61.8. By the way, it's no surprise that this move petered out at the 61.8 retracement of this move for right now. It's no surprise. So now we have a 61.8 retracement as a backup. So if we should come back up here, okay, I'm not, I'm going to be looking at a 15-minute chart or a 30, depending. Okay. And so the question is going to be, we would be looking for an area up here where maybe we would get a directional indicator. And the directional indicator would make sense when you look at the Fibonacci that I had here and saying to myself, and this is how we look at these charts every day. Okay, once again, let me just put that in for you. Okay. Now we're looking at it this way. Do I want to take a short? Well, you know what? On the 4-hour chart, we came right up to a 61.8 retracement. That's a good indication that this may start heading back down again. Okay, that maybe this move is over and now we're in this move. Okay, you never know for sure, but if we're done as far as long dollar Canada today. You were either in or out and made your money. The only other possible trade on dollar Canada today would be a short, okay, which will now be a high of the day directional indicator. So we know we already bounced off the 61.8. So that, but we did have a move down already. So, but if I were to get a signal, a short signal on a 15-minute or a 30-minute, I know I'm also backed up by a 61.8 retracement. And therefore, you know what? I may be comfortable now going short at the high of the day. Okay. So that's very, very important. Now, let's move on again. It's 9:45. I want to keep going here. Okay. So now so that's our directional indicator. Okay. Now, how does that risk management work? Very quickly to put on a trade. Let's go back. Now I can't put it on now, obviously, because there's no trade. But here's the point. All right. If you go up here, the B or the S button will set it up. So we were looking for a buy. So when we set up the buy, hold on. Let me do this so you can see it. Hold on. Let me go up here. You go up here to settings. And hang on a second. I wanted to see. No, excuse me. I need prop Fibonacci. Hold on. Settings. Settings. Okay. Byline color. Let's just do this so you can see this. Normally, I work these on Come on. Okay, so we set up a buy. Okay, so now you can see the signals. So when we set up a buy, this is what you got to know. Okay, you click the B button up the top to set up a buy. You're not buying it. You're not executing it. Okay, you would click the S if you're looking for a short. Okay, so the first thing that happens is the buy will come up, and we know our stop loss. Okay, on this trade was right around here. Okay. So what happens? Okay. Now, obviously, you would have been in over here. But what you need to know is we're going to decide how much risk that you're going to take on each trade. Our accounts are set up at 0.25% risk. Okay. Now, how do you calculate? So what does that risk management do? If you see, depending on where you get in, or depending how far you are away from your stop loss, so in order to make sure that you're taking the same amount of risk, the only thing that needs to be adjusted is your position size. So if you could see up here, okay, we have a 0.25% risk. Okay, it's a $100,000 account. We're risking $250. You see it right here. We're looking to make $310. Okay, it varies a little. Okay, 250, 300, 310, depending. Okay, here's your stop loss and take profit are up here. And importantly, is here is your lot size. Now that lot size will adjust. The closer you are to the to the stop loss or further away from the stop loss, this will automatically calculate your proper trade size so that when you enter the trade, you will have the proper trade size as it does come down to hit out your stop loss. Okay. You're only risking what you intended to risk, which was 0.25%. And you can see this is constantly changing 0.79 lots, zero point 0.8 lots if it was moving lower. So this constantly changes. And so what happens is again, whereas our risk management sets the position size. You don't have to worry about it. You just have to worry about how much risk you want to set on each individual trade, and we will show you how to set that. Very interesting. Okay. Now, to take profit will always be a function of where your stop is. It will always be 1.15, okay, away, okay, from the stop. Okay. Very, very important to know. Okay, so that's how our risk management works. So it's very important. The stop loss goes exactly where the alert tells you. That's where you drag your stop loss down to, and you let the risk management tool do exactly the work, and it'll set you take profit, and it will set your position size automatically when you click to enter the trade. And you would do that, and I'm not going to do that. All you got to do is click buy. Once you have this set up, if you click the buy, and conversely, if you click the sell, that will execute the trade for you. So that's how our risk management works. Okay, very important. Okay, you need patience. Okay, sometimes you're going to look at a trade. We're not going to like the entry, even though we have an alert. For as we showed you before, a couple of things why we may not like the alert. So it's a question of being patient. Maybe you come in to sit down at your computer and the alert happened a half hour ago. Well, you can look at the trade, you can see where it is. If there's a favorable opportunity to get into the trade, hopefully even at a better price than the alert somewhere down the road, it's not never too late to get into the trade. I'm going to show you that again in a second. Okay. So you know what? If right away when we do out, you get the alert, you take a look. We're going to show you how to differentiate between an A, a B plus, a B trade, and trades that you just don't even want to take at that time. And we're going to show you how to do that. And remember, we're going to let the stop loss or the take profit get hit. Okay. Really, that's it. So this is our goal. All right. I'm going to show you another illustration. This is our goal. This is what we do every day. You get an alert on a 15 or 30-minute chart. We look at the 4-hour chart. We look for some key levels and we say to ourselves, hey, you know what? Like I showed you before, okay, that we knew that there was a key Fibonacci retracement level. And so the 15 and 30 minutes alerts are great because when they coincide with a key level on a 4-hour chart, that's an early viewing into what is likely to happen. And that's how you get in early on a trade and you get a chance to make your money All right. While people are still looking at going in one direction, you're now going in the other direction. Okay. So that's really very important. Um, Now, let me show you quickly. That was dollar CAD. So let me show you quickly yesterday, because this was very, very important on a pound dollar 15-minute chart. Okay. This was an alert we had. Okay. And this was yesterday. Now, notice on the 15-minute chart, see what I mean by a closer directional indicator? Okay. We like this a little bit better than the one on dollar CAD, which there was more space between. So that's what made this an A trade. So here was we'll start. Okay. Now look at this. Okay. When you look at this chart, right, most people are going to be scared to go long off of this chart. I mean, look what's happening. It's not easy to be a buyer when you see something coming straight down at you. It's really not easy to be a buyer. Okay, so this is very, very important. Okay, that's why we use our signals here, and that's why our alerts help us get in when people are looking this way, helps us understand that the next move is more likely this way and gets us in at a very good price. So even if this down move does continue at some point in time, our directional indicator will get us in at a price where we can get a little bit of a reversal. We can get our take profit and get out before this particular move resumes down, if it does. We don't know if it will. Okay. But the idea is to get in, get out, because you are coming against the short term trend here. Get in, make your money, get out. All right. And be happy. Very important. Now, so this was the 15-minute. This is what it looked like. Now, I want to show you what the 4 hour looked like at the time. Okay. So now looking at the 4 hour. Now, remember, we went long. Now, look at this chart. You know, kind of got to be scared. I mean, look, all right. It's not easy to want to go long here. All right. But let me open this up a hair. How can I do it? How can I do it? Try this. Okay. And take a look on the 4 hour chart. Okay. So what do we have? Okay. We had a big move down. We took out a key high before the low. We'll explain that in future trainings. Okay. Just another thing to look at. Okay. Set highs back here last week. We're coming down again. But what do we have here? We had a new directional indicator right here. Okay. First on the 4 hour chart. Okay. We also had a key Fibonacci level down here. Okay. This move up down here gave us a key Fibonacci level. We had an amazing trader line. And because of this, okay, we were comfortable that this move will give us enough room to get into this trade on the long side because we did have a long signal and give us plenty of room to be able to get out of the trade before we would hit any key area over here, which may pose a real obstacle to getting through. So we got to be in the trade and getting out before we hit any key obstacles ahead of us. So it's very important. So that's how you look at it. Very difficult to say, hey, I'm going long pound dollar. The US dollar has been so strong. This is a very weak looking chart in general, but right now we understand that we are in a retracement. We don't know how far it's going to go, but we know that we had a move here. We retraced down to a good Fibonacci level, key amazing trader line, and we knew that when you add our alerts to this bigger picture that says, you know what, next move is probably going to be higher, probably. Not 100%, not 90%, not 80%. Higher probability. That's all you can ask for in trading. So when you can combine this, and then if you look back and you see the trade result, okay, from yes, very, very simple. We would have had an entry right here. Okay. Here's our entry directional indicator was here, but those of you who know the amazing trader will know that this was not confirmed until the close of this candle, the opening of this candle. So the opening of this candle is where the alert came out, where the buy came out. And as you can see, very little drawdown on that, and then move up and took out our take profit. And we don't have to worry about all this overhead resistance that we came into. Okay. So these are just two examples, but we do the same examples every day. We analyze our alerts every day exactly the same way. We teach you how to really identify on an A trade, a B trade, and a C trade. We put the odds on our side. We do all of the risk management work on our side. The only thing your responsibility is to make sure that your stop loss is in the right place. That's all you got to do. And then we'll teach you how to set how much risk you want to set, whether or not it's 0.1%, 0.25%. When you get really good, you can go to 0.5% on each trade. But if you're a prop trader, you got to be aware of drawdowns in particular, because relative drawdowns and overall drawdowns, is what puts you out of the game as a prop trader. So if you're a prop trader, you really want to be careful about your drawdowns. So I would really stay with the 0.1% risk to the 0.25% risk for now as a prop trader. As you start building equity in your account, even as a prop trader, and you get comfortable in how the program works, and you can see for yourself that your account is growing, then you have profits in your account, you have a little more room in drawdown, and you're confident you can move up to even 0.5% on every trade. Now, very, very simple. We're going to have a 1 day a week live trading training, almost just like we did today. Every Wednesday, 9:15, this time exactly, a 1 hour training where we're going to review the alerts of the day. We're going to show you how we analyze them. We're going to once again just go through exactly the same. This is just repetition. There's a few things to learn. So if you're able to join us once a week, every week, we're very, very confident that you'll be able to pick this up relatively quickly. Okay. Now, also, if perchance you can't attend that meeting that day, everything is going to be recorded, and we will send out the recording of the meeting for you later on in that day, so you can review the day if you weren't able to make the live meeting. So that's what we're going to offer as additional support. Plus, you can always email me or Jay. Now, those of you who are on Amazing Trader, we're basically at $97 a month. Because this is a new program and something that we're really excited about, we want to grab a number of users for our opening launch here. We have a little bit of a special for you guys, this is now not just the Amazing Trader. This is the Amazing Trader. This is the alerts. This is our risk management tool. And so what we're offering is right now 3 months, okay, one-time fee of $147, which is 50% off of $97 a month. But you got to buy it up front. You got to pay for 3 months. We insist on that for our sake and for your sake. Okay. We want committed traders. We want people who are going to give this time to learn. We don't want people who invest very, very little and then look at it and don't look at it and maybe follow it and don't take the time to really learn it. We want you to be patient. We want to make sure that you're with us for at least 3 months to understand how this program works and get comfortable with it. And if you're not getting it by 3 months, okay, then there's no reason to go further, to be honest with you. Okay, so we're going to give you that introductory price, and I am going to post. Let me see if I can post a link in the trade room. So hang on a second. Let's see if I have the link. There we go. Okay. So I just posted in the chat the link that you can go to sign up right now. If you have any more questions and you're not ready to sign up, this is a limited time offer. If you're not ready to sign up, email Jay. Let us know your hesitation. Let us know what you're concerned about. We're giving you a great price to get in. So it's 3 months for 140 and 100 and what did I say here? $147. Okay, for 3 months, and then $97 a month thereafter. But we want you in there for 3 months. If you're not getting it after 3 months, then honestly, there's no reason to go on and continue at $97. Okay. But we want you to give it 3 months. Take the time to learn. So that's it, guys. That's it for today. We are unbelievably excited. This is we take 99% of the decision making out of your hands. Okay. All you got to do is learn to use the risk management tool to place your stop exactly where the alert is, to use our 4-hour charts with a little bit of technical analysis, to make sure that those alerts are either A trades or B trades. Okay. We like A trades, we like B trades. We'll do them all. Okay. Sometimes they're going to be what we call a C trade, is a so-so trade. Okay. We don't have full confidence. It may be good, it may be not, but we have real high confidence levels in the A trades and the B trades. Now, it doesn't mean they're going to be 90% right. And again, individuals are going to interpret things a little bit differently. But we certainly think that with some practice and with some use here, that you can get your winning percentage 55% at least, which is enable you to make some good consistent money, and even get that up to a 60, 65, and even 70%, maybe more, one loss ratio, at which point you really start making some money with moderate risk. So that's it. 10 o'clock. I hope that gives you enough information. It's just a tease. Okay. Please join us. I recommend it highly. Let's get involved. Let's work with us. You'll have email support from Jay and I throughout the week for any questions you may have. We'll have the 1 hour live trading where we're going to be doing the same thing all the time. You'll catch on very quickly. I promise you that. And after 3 months, if you're not getting it, then you know what, find something else to do, to be honest with you. You're not just catching on with our system. All right. And we wouldn't want you to spend any more money. But if you just give us 3 months and you attend our weekly sessions and you email us with questions or you watch the recordings, okay, you're getting yourself a tremendous, tremendous bargain. So that's it. And we just I don't know if there are any questions. I haven't really been watching. I don't see it. Hold on. I don't really see anything. So thank you for being patient. That's it. Email J or I if you have any questions, but please sign up right away. We're starting the first session will be next Wednesday, same time, 9:15 Eastern time. And we'll, we'll get going together. I could tell you this, Jay and I have been using the Amazing Trader alone for a number of years. But we've really, really been able to perfected is not a great word, but we've really, really able to reduce it to just some minimal decisions that you have to make, and follow what we do, and you'll see the consistency. We're looking at the same thing all the time. So that's it today, guys. Thank you very much for your attendance. Please join us, and let's make some money and let's have some fun. So that's it for the meeting. We look forward to having you on board. Thank you.